All right, guys. So now we're talking about a tenant-friendly state, and these are again like you should do some research into figuring out what states you want to invest in. I'm just going to kind of give you the breakdown of what a tenant-friendly state looks like, or a tenant-friendly market. So typically, a tenant-friendly market refers to rental laws where the legal and regulatory environment tends to favor the tenants versus the landlords. So some of those things to look out for and do research on is limited grounds for eviction. So in a tenant-friendly market, you will tend to find where the eviction process is very long, drawn out, just very inundated with paperwork, inundated with courts, and for instance, like DC, there's people, there's something called like a TOPA requirement, and if you don't give the tenant rights in order before they move out and you want to sell the property, you don't essentially like you could lose out and they could stay there and they can squat in the property, and you may go back and forth again going to court, and the judge might say, oh well, the tenant has another 30 days to move out, and then 30 days goes by, they don't move out, you go back to court, they might give them another 30 days or longer, right? So it's a very long-winded process to get a tenant out, and there's very limited grounds for eviction even if they're not paying. So that's one thing to do research on. Look at the markets that you're looking at, do research on the eviction process, right? There is also rent control and a lot of systems in place to protect the tenant where you cannot raise rent. So even if it costs you more to maintain the building, or your taxes go up, or your HOA dues go up, or your condo fees go up, you might not be able to raise rents to kind of cover that. So it's a very risky investment when you're looking for these sort of markets. I mean, they are attractive. I'm going to get to them. I'm going to get to the reason why it's really attractive, especially right now. But rent control is a big one. And again, the government has a lot of their hands over the market, and they kind of control it. Like DC, for instance, they're allowed to own property. So they're competing with other people that are renting out properties, right? Biggest thing is security deposit regulation too. So security deposit will have a limit on how much you can charge the tenant or the prospective tenant. So typically it is only 1 month's rent compared to landlord friendly markets where you could charge 2, 3, 4. Some of them don't matter, but the going rate is typically 2. However, in landlord friendly markets, with you essentially charging 2 compared to tenant friendly, it's only going to be 1 typically, is what I see most of the time. Maintenance of the property. So again, if for instance, let's say, I don't know, you had a leak in the roof or something and you're waiting for your roofer to come by. Well, your tenant will have rights and might say I'm going to go get a hotel, and maybe they go stay at the Ritz or something and they charge you for that. And then a lot of times you might not get that money back, because what are you going to do? Go to court? And it already favors, the court system already favors tenants. So you're not going to get that money back. So essentially you have to be very careful with your property maintenance and conditions. The state or the county also has rights to come in and check on things if your tenant is reporting. And again, you want to make sure that it is a very livable condition, a very nice condition for any tenants. It doesn't matter if you're landlord friendly or tenant friendly markets. You wanted to make sure that they are happy, they're enjoying it. And I'm not talking about freeloaders, but essentially you want to make sure that people are happy in your rental unit, because that's just going to help you. The biggest thing as well is notice. So again, if you, for instance, in DC, and I use DC a lot because I understand that market really well, but DC has something called TOPA requirements. So the TOPA, in layman's terms, means that if you have a tenant in the property, you have to give them notice that you're going to sell it, and they have a right to purchase that property. They have TOPA rights, right? They have a right to purchase that property. Now, if they don't qualify, they can do one of two things. They can move out or they can squat, right? So if they decide to squat, you may have to pay them money. And DC allows for you to pay the tenant money to move out of the property. Sort of like a fee, hey, you need to get out of my property. Here's $10,000. It's not like it's $1,000, $2,000. It's 10, 20, 30. I've talked to investors that have paid, $90,000 to get someone out of their property because that's what they wanted, right? And they can kind of call the shot on how much they want to charge you, right? Especially if you want to sell the property. So The notice is a big thing. It's a lot of legalities and legality behind the TOPA stuff. You do have to hire an attorney. So, and sometimes it can really, a lot of control on a market could result in a lot of government corruption, in my opinion. And that's what I've seen in certain markets. So, always be careful of that and what you're dealing with. Tenant privacy. So you don't have the right to just walk into property. I mean, no state will really just give you the right to just walk into property without proper notice, but you kind of have less access to that property. You have less, like entry access and availability to go into that property when you're in a tenant-friendly state. Now, it's really important to understand that probably the biggest advantage with a tenant-friendly market is essentially the cash flow. Compared to a landlord-friendly that has high growth, well, in a tenant-friendly, typically you will see high cash flow because there's not a lot of. It's sort of like this permanent rental class. So you tend to see property values stay fairly stagnant and rental prices continuing to go up. So that's like the bigger difference between landlord-friendly and tenant-friendly. Tenant-friendly, cash flow; landlord-friendly, growth, right? And this is something that you have to figure out, and we're going to learn about what your buy box is or what your buying criteria is. But you have to figure out, hey, am I interested in this market? What's cool about this? What's not cool about this? So start thinking about these things and doing research on the laws, especially start in your own backyard, because it's going to be important to understand where you invest. And I highly recommend investing where you're at or close to where you're at. But if you want to invest in a landlord-friendly state and you live in a tenant-friendly state, then you may want to do some research as well to figure those out. So I'll see you guys on the next video. Take care.